Welcome to Business Reporter's Future of Finance campaign. I'm Rachel Hicks. Forex, the largest and most liquid market, has lost some of its dizzying potential in the last decade. Leverage caps have been introduced as the global regulation drive reached foreign exchange markets in the wake of the financial crisis. Compliance and following best financial practices have put an additional burden on brokerages, some of which have been inevitably passed on to their clients. Traders seem to have only two choices. They either settle for lower leverage and profits, or they move to offshore markets, sacrificing the safety net that regulation offers. But do we really have to fully abandon the idea of trading with a regulated broker under optimum trading conditions? This is what we're going to discuss today with Sudhanshu Agarwal, the Executive Director of Tickmill. Good morning.
Good morning.
Now, tell me, is there a clear-cut line between the regulated and the unregulated segments of the foreign exchange and the CFD markets?
Well, Rachel, the answer to that actually lies with the investor. Somebody who wants to trade their account or treat their account more like their gambling account, for example, they might be less inclined towards looking at a regulated broker, whereas somebody who treats it as an investment would be more inclined to looking at a regulated broker. To get regulated, we go through a whole process, which is fairly complex. The regulators obviously look at things like background checks on all the directors, our capital adequacies, and our compliance processes, which you mentioned earlier. The unregulated market, most of this actually does not exist. So it becomes appealing to someone who may be interested in just, not really having any real regard for compliance or doesn't really want to submit any KYC documentation and wants to kind of go unnoticed. We do a lot of research into this market, and on the unregulated sector, sometimes what we found is shocking and appalling. We've found cases of websites that don't exist, directors that are serving jail terms, and that's where the risk lies with the investor.
So what makes most regulated forex brokerages less competitive?
That's a matter of perception, isn't it? Let's look at Paul, for example. He's got $5,000 to invest. Let's say he looks at two ads, one from an FCA-regulated broker and one from an unregulated broker. So the ad on the FCA-regulated broker is going to talk about investor protection schemes. It's going to talk about things like stable banking relationships. It's going to have questions around whether he is suitable for the market or not. The unregulated ad is going to be far more appealing. There's going to be things like leverage of 1,000 times. There's going to be cashback offers. There's going to be things like bonuses on deposits and very attractive stuff. So now he's got a choice. If he is not really concerned about his 5,000 and doesn't value it as much, he might be lured towards the unregulated market. But if he treats it as an investment and security is important to him, he will obviously choose the regulated market.
Okay, so you seem to be implying that there's a third path that combines optimum trading conditions with investor protection.
One of the reasons why we've been successful is our relationships with our partners, like our liquidity providers and bridge providers, that help us offer these exceptional trading conditions that we do. And also, the regulation and the fact that we are regulated in all of our jurisdictions, I think that builds confidence and trust.
So what role do liquidity providers play in it?
Well, Rachel, as the term suggests, they're liquidity providers. They provide liquidity to the market. And that's what helps give pricing, constant pricing. But during news announcements or during certain events, liquidity could dry up. and those extreme volatile times. And that's where I think sort of the hybrid model comes in, where the broker might be able to internalize some of those trades and be able to pass that on to the clients and hopefully offer a seamless service.
How does Tickmill tailor its brokerage services to the different needs of professional and retail traders?
So let's look at what traders want. So retail traders are slightly different in that they want low commissions, low costs, fast execution, some educational tools, and some market analysis tools. And that's kind of the bread and butter of our offering. Professional traders, which in our case include some hedge funds and money managers, they also require low latency. They want some access to some bespoke solutions.
So how do you see the company evolving over, say, the next 5 years?
Oh, I'm truly excited about that. Without giving too many secrets away, what we're trying to look at is just improving our product portfolio. So we've got things like additional trading platforms. We've got certain access to additional markets like exchange-traded products. We've got a range of innovative products and services coming in, and which include analysis tools, market analysis, and risk analysis. And the whole objective at the end of the day is to provide transparent, good service with access to global markets that all of our traders can benefit from.
Thank you for coming in and sharing all of that with us today.
Thank you, Rachel, for having me here today.